Hello and welcome. This is the Insurance Pro Blog Podcast. This is episode 441. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
Oh, boy.
Probably should take that out for now on, because that's...
We could get more people to hang in there.
That's probably why. Stop saying that.
And even more so, in case you weren't aware of life insurance, it's Life Insurance Awareness Month. That
is why I wanted to talk about what we're talking about today.
It's kind of a conundrum because we assume you know life insurance exists if you're listening to a podcast about it's very inception. That's what we're getting at here. It's a very meta discussion.
Do you remember the days, did you do this at Northwestern where they would like hand out the little trinket for Liam that you could wear? Like when I was at Guardian, there was the remember the Livestrong bracelets?
Oh, yeah.
Then morphed into lots of other things.
Mm-hmm.
So they got the bright idea to do the Liam bracelets.
Oh.
And so they got ordered and we were supposed to wear them so that when people asked, hey, what's that bracelet for? You could start talking about life insurance.
Are you aware that I sell life insurance?
Guess how many people I started a conversation with about life insurance because of those
about
bracelets.
As many people as you do now. 0. Actually, let's be honest. You don't start conversations with people.
I don't. Try to end them when they start with me. Actually, I use life insurance as a reason to end the conversation.
That's right.
Somebody recently decided they were going to keep asking me questions too. I was like, you're not doing this right.
You didn't get the cue. I told you I sell life insurance. Burial insurance? I mean, what's worse, right? I'm also a personal injury attorney. That's what you throw that in there. That'll get them moving.
I sell prepaid legal on the weekends.
When I'm not too busy with my Amway business. Just keep trying. So the in my notes here.
Yep.
Says life insurance sales are on fire.
Ooh, you were doing something in the notes because I can see the picture of you floating across the page in the notes. Look at that. That's interesting. Life insurance sales are on fire. So
that's not hyperbole either, by the way.
It's not. Like the data is here, and this is as exciting as an industry like life insurance gets. We have the Q2 data from 2025 out from LIMRA telling us that...
what does LIMRA stand for again? In case the uninitiated people and me don't know. I can't ever remember. Life Insurance Marketing Research Association or something like that?
Something close to that.
Okay.
The acronym isn't important. The institution is. It is the industry's research arm.
Yeah.
So independent, but heavily funded by the life insurance industry. So
yeah, and the companies all feed data.
Yep.
To them so they can compile this information.
Yep. Premium increase 13% and total issued policy increase 17%. That's the highest recorded increase since 1983.
That's a long time ago. That's when Universal Life was starting to get its legs.
I wasn't around then. And I'm finally at an age where that's becoming more significant to say.
That's right.
It's a point in my life that good for you, kid. But
I was learning phonics probably. There's people listening who don't know what that means. Yeah.
Yeah.
So the 13% premium increase in Q2, was that over Q1 or was that over the same quarter the year before, or do you know for sure?
Over Q1.
Okay. You said that with a question mark.
Well, hold on. Let's consult the actual LIMRA data here.
Jamie, look that up.
Yeah. We need Jamie. That 13% increase was year over year.
Okay. Yeah. Gotcha. So very significant.
Mm-hmm. So.
And total policies up 7%.
That's a big move for the industry.
I don't know. That's almost more impressive to me.
Yeah.
Because, I mean, with inflation, you would assume some premium increases, like total volume of premium to increase a little bit.
Yep.
But not because rates have changed per se on policies, but people were probably insuring for larger amounts than they were. That's my logic there. But that just means when you say total policies issued rose 7%, that means more people are buying policies.
It does. It does. And that's more people are buying policies, and they're buying it at an increasing rate that we have not seen in a very, very, very long time.
Right.
So that
42 years. Right? Yeah.
Can we not put a 4 in front of these things that go back to the 80s? That's
it's gonna happen.
You might be more comfortable with that than I am.
One of us is closer to putting a 5 in front of him, so let's not go there.
So, yeah, I mean, it's some people may look at that and think, whatever, but we're talking about a very big industry.
Yeah.
That sells a very boring product.
Yes.
That most people are just not that interested in talking about.
Right.
But it is sharply on the rise.
Yeah.
And we're also seeing,
I would say, in a mature industry that's as large as the life insurance industry is, anything north of 5% is massive in terms of an increase. It's a really big deal.
Well, think about the idea of policy count and what that means when we're seeing it increase by this number.
Yep.
Because we're talking about figures that are millions.
Yeah.
Like, there are millions of policies issued each and every single year. And now we're talking about the quarter, where it's also millions that are issued.
Right. Right.
And we get an increase of 7%.
Right.
That is
hundreds
an accomplishment.
of thousands more, probably.
Yep. That is an accomplishment.
Yeah.
By the industry. And what's
tuned
more
to the end, and Brandon's going to tell you why this is happening.
Well, I was going to say, what's more interesting, what's even more interesting than that is the fact that we basically break life insurance into 4 categories these days. So we do have the 2 broad categories: cash value, term life policies. But generally speaking, we think of it as term, whole life, universal, index universal life insurance, and variable universal life insurance.
Right.
And the big driver of these increases, it ain't term insurance.
Nope.
Term insurance is pretty flat here. The growth numbers are quite small. It's not shrinking by any means, but the growth rate of term insurance year over year is like 1%.
Yeah.
So the year over year growth of index universal life insurance is like 21%.
Yeah. Well, term insurance pretty much flat because you and I both know we've been doing this for a long time. Most people don't keep their term insurance for even the full term. So they stay at replacement, basically.
Yeah.
With
but
slight
still,
growth.
The amount of people going out and buying new term policies is just not that large. Like that marketplace is basically, there's just a certain number of people who buy it, and that number stays pretty consistent year over year.
Yep.
But we're seeing like a rise in index universal life insurance of 21%. We're seeing a rise in whole life insurance of 8%.
Yeah.
We're seeing a rise in variable universal life insurance of like 4%. So those are faster growing categories. The cash value categories are the driver of this growth. The boring, you shouldn't buy it, it's a bad investment category of life insurance is the one that's driving all this growth.
It's very counterintuitive. I mean, it's not what, when you shared this with me, it's not at all what I would have expected.
Right. You thought everything was going to be down?
No, I didn't think anything was going to be down. I just didn't expect such sharp increases, and I definitely didn't expect that IUL sales would be up 21% year over year.
Okay.
That's big.
Yeah.
I mean, that's just really, really big.
Yep. Now, to some degree, because regular kind of old school universal life insurance is still a category that LIMRA tracks.
Yeah.
And we are seeing those numbers go down. And I've been arguing for a few years now that what's happening in indexed universal life insurance, we're seeing a swap.
Sure.
So people are buying indexed universal life insurance and they're not buying the regular universal life policies.
Yeah.
So there's the growth story
you can't
there.
Blame them. I mean, when you look at the two, you go, I think I'll do it, because there's still a lot of, and there are ways to design an indexed universal life insurance policy with guarantees if you want them.
Yeah.
So
yeah,
it's kind of becoming the catch-all UL product for the fixed world.
Yes, it is. It is. And we're starting to see indexed universal life insurance, though, make up a certain percentage of the overall market share of life insurance sales that is creeping into whole life insurance territory.
Yeah. What is it, 25% of the market now?
25% of the market to 37% of the market for whole life insurance.
Yeah.
Even variable universal life insurance, which is now 14% of the market. I remember reporting on data like this like 5-ish years ago when variable universal life insurance was like 8% of the market.
Yeah.
So it's grown. It's grown considerably.
I was going to say 7, but yeah, I think it was. You're probably right. Half as much.
Mm-hmm. The other thing that we get from this data when we look at it a little more deeply is we are seeing for sure the cash value policies grow. And we've made an argument for a number of years now that despite the negativity campaign that goes back decades, it really isn't new to come out and say whole life insurance or universal life insurance is bad. But that campaign has definitely kept alive. And there are people who have launched their careers as finance/investment commentators.
Yeah.
And have absolutely spent a fair amount of time telling you why you should stay away from universal life insurance and whole life insurance.
Mm-hmm.
And despite all of those claims, they're still on the rise. And we've got podcast episodes and articles at the Insurance Pro blog that look specifically at the policy count at some of the companies that are more noteworthy for their products for people who want to build a policy with cash.
Right.
And we've noted that over the past 5 to 10 years, their policy counts grow. They don't contract. They're selling more of these policies.
Yep.
And the other thing that we can glean from this data is we can look at how people are, in some cases, approaching the life insurance purchase with things like universal life insurance, variable universal life insurance, and whole life insurance. We do have the ability to pick a little into this data, read between the lines, and see, well, okay, we get a good sense for what the average policy size is among some of these insurers. We can even tell on the whole life side who is primarily selling policies that are, shall we say, overfunded is the term people like to use, versus the ones that aren't doing that at all.
Right.
They're just issuing regular whole life policies. And we're definitely seeing from this data the fact that the typical universal life policy, be it VUL or IUL, is much larger than the typical whole life policy. Even when we remove the non-cash focused players from the equation. So if we look at the whole life sales that are definitely more focused on max cash objectives.
Right.
We see substantially larger policies being issued on the universal life side than on the whole life side.
Mm-hmm.
And to put a number on it, the highest average premium, if we look at it as per year premium from the data here, was actually Mass Mutual at $24,600 per year premium.
That's on the whole life.
That's on the whole life side.
Right.
And that's taking the data from LIMRA and basically dividing total premium reporting by policy count issued, and this is for the second quarter of 2025. So
Right.
that's what we calculate the average kind of per year premium to be issued there, which is not bad. But if we look at that in the variable universal life insurance space, we see the highest average there coming from Pac Life at $208,000 per year. And when we look at index universal life insurance, we see, again, Pac Life at $132,000 per year.
Right. A lot of premium financing.
It could be. That could totally be playing a role in this. Pac Life, that's a product that I've got some reservations about in certain circumstances. So, but definitely a player that has always been in the larger premium world,
for sure.
and absolutely in the premium finance world.
Yeah. Yep. I would agree with that.
So,
but I would say, I mean, this is a very small sample size and completely anecdotal, but for you and I, in our practice, this data bears out.
Yeah.
We see the larger premiums going towards index universal life insurance. It's kind of flipped in the last several years. It used to be whole life insurance.
Yep.
But not as much now.
Mm-mm. Not as much as it once was. Now, objective still matters. There are some large whole life cases for specific reasons. But yes, just on average, the index universal life insurance cases have been larger than the whole life cases.
Yeah.
And the index universal life insurance cases have been more frequent than the whole life cases.
For sure.
In recent years.
Yeah.
Now.
Well, we used to get more people just demanding nothing but whole life. They didn't want to see anything else.
Yep. That having been said, the number of policies issued. So let's take premium out of the equation for a second and just look at this purely as number of policies issued. Whole life insurance is still the mammoth here.
Yeah.
Like, term life sales are quite a bit in terms of number of policies issued as well. But if we want to just talk about cash value style policies, universal life and index universal life insurance policy count combined doesn't come anywhere close to whole life sales.
Right.
That having been said, whole life sale policy count numbers are inclusive of smaller, what are typically focused more as final expense style policies.
Yeah.
That boosts those sales figures significantly. Like the number one issuer of whole life insurance policies in Q2 of 2025 is Mutual of Omaha.
And that's policy count, not premium.
Yep, policy count.
Right.
And number one by a lot.
Mm-hmm.
But not a company.
You can tell because their policy count, they're number one in policy count, but they're number 4 in premium.
Yeah. Yep. They're that and their amount of premium is substantially less than like the number 1 and number 2 issuer.
Yep.
And if you look at it in terms of, and that's looking at its annualized premium, this we're bouncing around, it's going to confuse everybody. But if you then look at it from the total premium, which includes the excess payments to whole life policy, they fall even further down the list because they don't do any of that. So not a company that is designed for, or not a product that's designed for cash build-up style purchases, but issuing a lot of policies at what is a smaller average premium for people who are very much wanting to buy permanent death benefit, probably to take care of funerals and other final expense type things.
Sure.
So not exactly playing in the same field as we would see in the index universal life insurance world, or even the variable universal life insurance world necessarily.
Right.
But there's something else about the growth of variable universal life insurance that you brought up when we were talking about this episode ahead of time. And I was able to confirm your theory that there's a very, very good chance the increase in interest in variable universal life insurance is driven by the creation and now availability of indexed accounts inside variable universal life policies.
Right.
And I say that. Oh, go ahead.
They're taking a piece of the IUL playbook and putting it inside the VUL. So they'll have an account that's tied to an index. You get interest accumulation based on the index with some sort of minimum guarantee or zero guarantee or something like that if it goes negative.
Mm-hmm. I say that because the number one issuer of variable universal life policies in Q2, and they're number one in policy count, they're number one in annualized premium, they're number one in total premium.
And it's not even close.
Yeah.
I mean, like the number two is not even
right. No.
Remotely close.
It's a third if we're looking at premium, and it's half if we're looking at policy count. Prudential, which interesting because they've never really been a big player in the cash focused world, but they are definitely issuing policies that are being overfunded, and they have a very wide array of indexed accounts inside some of their variable universal life policies.
Oh, you were able to to verify that.
Yep. Very unique offerings.
Yeah.
Not unique in the sense that I think they are going to blow the rest of the industry out of the water per se, but they've got some twists on it that are at least interesting. And when it comes to variable universal life insurance, you do have the claim that you can make that you could bounce between indexed accounts and investment accounts.
Mm-hmm.
I don't really know why you would necessarily want to do that, but that's something that you can look at as a possible pro to variable universal life insurance.
Well, my speculation about that was due to back in the what we call it, the mid 2000s, early 2000s. The 2004 to 2008 time frame.
Mm-hmm.
Prudential dominated the variable annuity space.
Yep, it did.
And they
HD7 baby.
They did so because of some product features designed to be marketed in a way that was really appealing to people.
Mm-hmm.
You could argue, I'm not going to, but one could argue how good the features actually were, but because they were really expensive. But it led to a lot of sales. It was an easy story to tell, I guess is what I should say from a sales and marketing perspective. And so that's what made me, I don't want to say suspicious because I'm not implying that Prudential's doing anything untoward. Just that they've got some story to tell that's very compelling for people when you see numbers that large. And
right.
From a company that wasn't really that interested in that 10 years ago.
Mm-hmm. Suddenly showing up top of the list. That's noteworthy, but it also makes you.
And they have the resources to make big moves when they want to.
They do. They have the ability to create a huge sales team. And we don't suspect that these numbers are coming from career agents as much as they're coming from brokerage.
Yeah, broker-dealer channels. Got to be if it's VUL business.
Yep. Which they would have the resources to get in front of without a whole lot of trouble.
Absolutely, yeah.
We do see, interestingly, on the VUL side, when it comes to policy count issuance, we see companies that for years kind of had a bit of a dismissive attitude towards variable universal life insurance. Like the number two issuer.
But they're quiet about it.
Number two issuer of variable universal life insurance in second quarter of 2025 is Northwestern Mutual.
In policy count.
Yep.
Yeah.
Number three by annualized premium.
Yep.
They aren't really doing anything on that space.
So you're saying they had a turnaround change of heart about universal life insurance? Is that what you're saying?
I mean, it's interesting. They're by the numbers, they're not really doing any at all like overfunded VUL stuff. There's not a lot of data. If we look at annualized premium versus total premium, that would suggest there's these big lump sum style cases going on.
That's true. There isn't. Yeah. That's really interesting.
So they're selling it, but they're not necessarily selling it with a lot of excess premium. Not following this data. Now I know that
we'll see how that works out.
I know one of Northwestern's core philosophies going back decades now was the idea that if you bought variable universal life insurance when you were young, you would maybe swap it out for whole life insurance when you got older. Because they do allow it. A number of companies that have whole life policies and variable universal life policies allow that. So it's an idea. I don't really know how many people actually do it, but it's an idea. And that might be driving some of their sales there.
Yeah.
They're no slouch when it comes to whole life insurance. We know that. Sure. They are high on the annualized premium list. Not nearly as high on the policy count list, but I would argue that they're the highest on the policy count list when it comes to companies that you'd expect to be selling whole life insurance for cash focused sales.
Yep.
But again, interestingly, looking at the data, when we compare annualized premium to total premium, which gives us a sense of how much of the policies are being sold with excess funding, they're not really doing it that much.
Yeah. Not a lot of heavy use of paid up additions.
No, because the gap between their annualized premium and total premium is not much at all.
What, 30 million?
Yeah. But like it's we're talking $341 million of annualized premium versus $375 million of total premium. And to give people a better sense of how we're kind of looking at and evaluating that, Mass Mutual, we mentioned earlier, is the one that has the highest kind of average case size here. Their annualized premium is $256 compared to $434 as their total premium, which means their total premium is getting close to 2 times what their annualized premium is. Northwestern is nowhere near that ratio.
Right.
And we take a look at Penn Mutual, which is $46 million in annualized premium versus $128 million in total premium. They're more than 2 times.
Yep.
At that point. So.
As is One America.
Yep. So that is the indication that there's a lot more overfunded or excess funded whole life sales taking place there.
Yeah.
And Northwestern just doesn't have that kind of ratio. So they're not
Take
doing
that
it
for
as
what
much.
it's worth.
They're not doing it as much. They're not.
Which again, anecdotal based on the number of policies we've seen from them over the years. That's not all that surprising.
Nope. Now, 66,000 policies issued in the Q2 of 2025. That's a lot of whole life policies issued.
Yeah, it is.
Mass Mutual only issued just under 18,000.
Yep.
So they certainly are. They certainly have a bigger ground game than all of the other mutual life insurers that are issuing whole life and talking a lot about the cash accumulation of whole life.
Yep. That is definitely true.
So there is a significant growth that's taking place, and it's taking place in the cash value side of life insurance sales. Despite what certain very highly opinionated guys on the radio will tell you.
Yep.
Despite what certain people who have websites or YouTube channels will tell you. The voting with dollars is taking place and a lot of people are buying policies.
I have a theory about this.
Okay.
Just a theory. But, to a generation, probably more people, our parents, your and my parents' age, in their 60s and early 70s, on down to maybe even people my age, Gen X people. The buy term and invest the difference crowd, let's just call it that. That message was new.
Okay.
When it started to be promulgated widely. I realized that message started back in the late 70s, but it really caught fire in the 90s and the 2000s. And with the dawn of the internet being in everyone's pocket, it really took a root there. I think we're moving into an age where there's a whole generation of people who have now come of age that's not a new message to them. That's the message they heard their whole life. So people talking positively about cash value life insurance is a different thing. So there's sort of this anti mentality there of like, well, that's the stuff my parents listen to. I'm not listening to that. And I'm being tongue in cheek about that.
Yeah.
But I feel like we are definitely living in an age where no one believes anything that they see on the internet wholesale. So people do their own digging. They do their own research. And I think, as we have seen countless times in the 13 years that we've been doing this together, lots of people have some big revelations when they first see how this works, and they ask a lot of questions and they begin to understand and see the bigger picture. They're like, well, this isn't how I thought it worked at all. That's just a guess. Now, there also are, to give credit where credit's due, there are some really big marketing organizations pushing a lot of index universal life insurance out there.
Yeah.
So
there's an entire
TikTok subculture.
Yeah, there you go.
So I hear. I don't have a TikTok account. I don't know how it works. But
I don't know how successful that is. And to look at this data on the index universal life sales specifically, because I've had conversations with other people who get really, really, really worked up about the whole TikTok IUL thing, because there's a lot of cases they've brought to my attention of TikTokers. That's what you call them.
Sure. That's what we'll call them.
Sure. Selling or talking about index universal life insurance in very cringy ways.
Oh yeah, for sure.
So like it's there. And like I've had people bring this to my attention and they're enraged by this.
Yeah.
But I'm looking at it and I'm thinking, the examples that they're using, and just maybe I'm being super duper dismissively judgmental by their presentation.
I'm sure you are, but
yeah,
go ahead.
I usually am. But like, I'm thinking the kind of person they're trying to sell this to is very different from the type of person that I know I'm talking to most of the time.
Right.
And I would guess the person who brought this to my attention wants to talk to.
Right.
And I look at this data from LIMRA and I see that, okay, there's some evidence of companies that are selling a lot of very small IUL policies. National Life Group.
Yep.
Sticks out. Like it glaringly sticks out. You don't even have to do the math to go, whoa. And then you do it. And we said Pac Life's $132,000 on average. National Life Group $6,700 on average.
Yep.
So
there's
huge,
a lot of $1,200 premiums.
Huge difference there. But there's a lot of other companies on this list that are doing numbers that are closer to those Pac Life numbers.
Yep.
And I cannot imagine that the TikTokers are bringing in those clients.
No.
Maybe I'm wrong. And if I'm wrong, somebody please tell me, because I will do the stupid dance on TikTok and try. But
well, you and I know there's a couple of I'm going to call them the wrong thing and get sorts of hate comments. I would call them multi-level.
Yep.
Setup.
Yep.
Organizations.
Yes.
We used to call them pyramid schemes.
Yep.
That's not polite anymore. But who at least recruit a lot of people to sell IUL.
Right.
I don't know how effective they are. I have no idea. I don't know. I just know they're out there. And that's what I've been told the TikTok people are, by and large. I don't know if that's true.
Okay.
Just passing that along.
Yeah.
But I would think that was, younger people selling to younger people generally results in smaller premiums.
Yeah.
Not always, but
it does.
Generally speaking.
So It just doesn't seem like by this data that's where the win is.
Yeah.
So
that's expensive business.
Yeah, it is.
Because setting up a new policy costs the same, whether it's a $500,000 premium or a $1,200 premium. I mean, to the insurance company.
For the most part, yeah. For the most part. Okay. The clock on the wall says we spent way too much of your time today.
Well, most people have tuned out by now.
So
not to worry.
To let the three of you who made it here go about the rest of your day, I am Brandon Roberts.
And I am Brantley Whitley.
And we will see you next week.